This is also why I believe that move to the downside in Bitcoin is imminent. I would be very careful once again about that, not just in Bitcoin, but in all assets. Just this is the time. If you have trades open, close them, take your profits. Obviously, if they're not, short trades to the downside, but if they're long trades, close them, take profit, wait for a big move, wait for us to hit major support, then you get back in again. Not financial advice, but just what I would do. I've been caught on the wrong side of these moves so many times. It's kind of like, after a while, it happens so much, you're like, oh, I've seen this movie before. Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is November 28th, 2023. And just a word of caution, because Bitcoin's distributive range is just about complete. It looks like it's on its last legs, right? Meaning, if you don't know what I'm talking about, here I'm going to show you. Guys, if that sounds interesting to you, then watch until the very end. This is a word of caution, not just for Bitcoin, but also the rest of the cryptocurrency market. We know, as with Bitcoin goes the entire market, right? That's why we use Bitcoin as a proxy for the cryptocurrency market at large, because by and large, most assets will follow Bitcoin, okay? So we'll get to that in a second, but first let's start with Bitcoin, right? Look at this chart, and I really want you to throw out all the theories that you have in technical analysis and just look at this from a common sense perspective. If you look at this chart, you can clearly see that there is some sort of resistance at this level, okay? Price came in, stay with me. Price came into this level chopping up, right? And then made one last move. Okay, forget what wave we think this is. Forget all the technicals that you know. Just look at this from a common sense perspective. So there was an effort made at this point and then one last ditch effort. Now, we've had, since that point right here, since early November, we've tried but failed to make it above the $38,000 range. What do you think happens there? It's not just the fact that we've tried and failed to make it above the $38,000 range for 19 days, but the context. You come into the range already struggling. It already shows you, this shows you basically that whatever you're looking at, whatever the progression is, it's already losing steam. It's already kind of on its last legs. Some people may say, well, Dean, could you not look at all of this as one contiguous move? Sure, but it's a tough sell. It's a tough sell to say this is one contiguous move, and I'll say why. Because look at this and look at this. Characteristically, these two consolidative ranges are different. Characteristically different, right? Qualitatively different. This one's tighter. It's much tighter. And this is much wider. Okay? So it's unlikely, nothing's impossible, but it's unlikely, statistically speaking, that you're looking at one rising wedge that is eventually looking to break out. Okay? Very unlikely. More likely than not, you're looking at this rising wedge broke out, completed, and now a serious level of resistance is found here, and the price has just not been able to break that range to the upside. And we know why, obviously, on this channel, because that's the end of the impulse. Okay, very likely you're looking at wave 4 right here, which is typically in Elliott wave theory a complex flat correction, right? You always see those in wave 4. You never see them in wave 2. That's exactly what we got. If you've watched my previous videos, we've measured this impulsive wave. Whoops. Let's try that again. If you watch my previous videos, we've measured this impulsive wave from our purported wave 1 all the way up, and everything fits. Wave 1 and wave 2 take around the same amount of time. Wave 3 is about 1618 to 2 Fibonacci extensions of wave 1, retracement of wave 2. Wave 4 is complex and corrective. It's a complex flat correction. Wave 5 is about the length that you would expect wave 5 to be. Inverse 618, I believe. Inverse 1618 of wave 4, and then taking wave 3, retracement of wave 4, it's you hit the 618. So let's just try that right here together. Wave 3, retracement of wave 4. Oh my gosh, look at that. Guys, I promise you I did not do that previously. This is all from theory, and this is the beauty about theory. When theory meets practice, it's one thing to know theoretically what should happen and all that stuff. It's another thing entirely to practice it and to apply it and to see it in the charts. And that's the only reason I put any money on the theory that I learned in Elliott Waves Made Simple, in the Wave Principle by Prechter and Frost, and any manual that I may have read to learn Elliott wave theory. The only reason I put any credence, any faith in it, and any money in the sort of trade plans derived from that is because I see it all the time. It's consistent. And what does Ralph Nelson Elliott say? Again, when you measure wave 5, you typically get wave 3, retracement of wave 4, targeting the 618. And that's exactly what we got. So any way you slice it, theoretically, with a high degree of probability, we're dealing with 1, 2, 3, 4, 5, and this is our resulting distributive range. A distributive range, for those of you who may not know, is basically when price goes from one place, a distributive range is when price consolidates to eventually break down. Okay, so it is something that you see all the time for price going up and then back down. Price never changes direction from one impulsive move or from one impulsive direction to another without a distributive range or without an accumulative range. So distribution and accumulation are two sides of the same coin. The Wyckoff analysis really describes this in detail. Basically, to go from down to up, you have to have an accumulation range. To go from up to down, you have to have a distribution range. So for us, this is our distribution range, and this is our resulting distributive move to the downside, more likely than not targeting the $31,000 target, which we've been talking about for a long time on this channel. Again, I did say also in a few videos that I made on this topic that don't be surprised for the distribution to take time. That's what happens. It doesn't just, we see 1, 2, 3, 4, 5 waves up, and then we're just going to go 3 waves down. No. You distribute, and then all of a sudden, for those who may not be well versed in chart analysis, it seems to take them by surprise. They're shocked. They thought the price was just consolidating, reaccumulating for another push up. But that's basically what all novice traders, people who don't know how to take profit, they fall for that trick, because you've been given ample time to take profit here, to get out of the trade here, and this move to the downside was telegraphed to you in so many ways, you just weren't able to read it on the charts. But don't be surprised. all of a sudden, after this, boom, quick move to the downside. And then once that happens, right? Once this quick move to the downside happens, give it a little time. You remember, every impulse to change direction from down to up or up to down, you have to consolidate. So this will be a consolidation, accumulation, an accumulative consolidation rather, to go now back up, right? And that everything fits about this. I even gave the time frame. Why? How was I able to give the time frame in some of my first videos discussing this? Is because if this is indeed an impulse, this would be wave one that Bitcoin put in after our massive accumulation of what, a few hundred days. So if that's wave one, then we know wave two takes around the same amount of time as wave one. And I did measure this few weeks back as being like around December 3rd, December 4th, right? Because it's 25 days up, right? And we measure, you should take around 25 days down. So that gives us December 4th, as you can see on this chart. So I would not be surprised if any, either today, which is the 28th, or tomorrow, the 29th, we got that move down, okay? And subsequent to that, we consolidated for a few days before moving back to the upside, right? And why am I saying today or tomorrow? Remember, it's a full moon out right now. The full moon typically represents the full moon typically represents local market bottoms, okay? And if you see, look, let me turn on our moon indicator. Guys, if you're getting value, please like, share, and subscribe. Look at the moon phases indicator. Okay. So the full moon is shown here, but actually, you typically get the move 0 to 3 days after the full moon, or after the incidence of the full moon. So the full moon was on the 27th. So it gives us the 27th, the 28th, and the 29th. Today's the 28th. So I think the 28th or the 29th, you may see this move down, representing the local market bottom of this chart. Okay? So this is just what I'm seeing. And again, this moon phases stuff is really consistent. Look, new moon, local market top, right? That is uncanny. Absolutely uncanny. It even got the bottom of this wave 4, right? We call that the it is the bottom. It's the technical bottom of the wave 4. I'm forgetting the term I'm looking for. In any case, it's not important. So that's Bitcoin. That's what I think is going to happen. This is why I'm urging caution. In the next couple of days, would not be surprised if we get a 18-19% move to the downside. Okay, that's Bitcoin. Now remember, as Bitcoin moves, the rest of the market moves. So don't be surprised if altcoins also take a tumble. But given what we're seeing in the market cap Bitcoin dominance chart, right? We may not get as big a move in altcoins to the downside as we will get in Bitcoin. And this is one of the few times you can say that altcoins will be outpacing Bitcoin on a move down. That rarely happens, but I believe, given what we're seeing in the local market, in Bitcoin's Bitcoin dominance chart, and in the individual altcoin charts, that we may not get a massive move to the downside in altcoins, but we still will get something in most altcoins. Okay, don't be sort of misled. Just because altcoins will outpace Bitcoin doesn't mean all of them are just going to skyrocket up, right? While Bitcoin is dumping. No, while Bitcoin's dumping, everything else is going to take a tumble. But while Bitcoin's consolidating at the bottom of that move, what you should expect is a lot of altcoins basically moving to the upside before Bitcoin. Okay, and here in the local market I don't know why I can't say the name of this chart. In the Bitcoin dominance chart, what you can see is we're clearly having a sort of a move to the downside. It looks like we're having a move to the downside, and that's significant because remember, if Bitcoin dominance is going to the downside, that means Bitcoin is losing against altcoins, right? Either altcoins are gaining by going to the upside faster than Bitcoin, or they're gaining on Bitcoin by going to the downside less than Bitcoin. That only happens when altcoins are closer to their bottoms than Bitcoin, and so they don't have to move to the downside as much, or they're already at their bottoms, and as Bitcoin's moving down, or right as it finds its target to the downside, they start shooting up. This is what this chart is telling us right here, right? Look at our momentum indicator on the daily time frame. It's basically telling us that this Bitcoin dominance is double topped. It's overheated. It needs to come down on the momentum, right? The chart also tells us that on the smaller time frames. If you pay attention, you can see this level has been tested many times right here, right? It was support here, and now it's resistance, resistance, resistance. So many times it's been tested, likely to result in a move down. Look at the 4-hourly market cap, 4-hourly momentum indicator also looks to be moving down. So this is why I'm saying altcoins will gain against Bitcoin. That's why in the previous video I said altcoins are poised to surge, something like that. I forget the language I used, but the trade to the upside is in altcoins. If you're keen on trading something short, right, to the downside, you may want to do Bitcoin. Obviously, altcoins are going to move to the downside as well, but not as much. But some may move a significant bit to the downside, especially those that have already gained, right? Those that have already moved to the upside. Now, looking at altcoins specifically, I said in the previous video that this was likely some sort of wave 4 correction and that we would move up from here, okay? That may still be the case. But we can also always find resistance here and then treat this like wave 1, wave 2. I think that's less likely, but what I would do and what I am doing is I'm just waiting for Bitcoin to put in that move. I don't think it's prudent to trade anything in crypto long or to the upside until Bitcoin has put in that strong impulse to the downside. I think if you wait for that, then you're cleared. You at least let the big flush happen, then you go in and you kind of scoop things up, you sweep the floor, as we say, you buy things at a discount. But until then, it wouldn't be wise because you kind of want the markets to let you you kind of want the markets to show you what they're going to do, right? Bitcoin we look at nauseum, so we have a high degree of probability that it's coming here. But you know what? Altcoins are more difficult to read because they're not in impulse and they're in corrective patterns, and corrective patterns are by definition capricious and unpredictable. So I don't know exactly what a lot of these altcoins are going to do when Bitcoin goes to the downside, 19%, 16%, whatever. Are they going to go down more? Are they going to go down less? I think in aggregate they're going to go down less, but how are they going to go down? Jury's out. Jury's still out, right? And the last thing I want to look at is the DXY, the US dollar currency index, as we know, is our market mover. This is our liquidity provider. And what we want to see in the DXY to confirm, sorry, let me fix my screen. Guys, if you're getting value, please like, share, and subscribe. Okay, there we go. Okay. What you want to see in the US dollar currency index, if you're predicting or you're anticipating a move to the downside for Bitcoin, what you want to see is a strong move to the upside in the US dollar currency index, okay? On the high time frame, the daily time frame, the momentum indicator is telling us that this is possible, okay? You basically have double bottomed here, okay? You've double bottomed, and you're likely on the floor looking for a return to the upside. That doesn't always mean a move to the upside on the charts, but again, it's just an indicator. So this indicator is telling us that yes, we're nearing some level of support for the US dollar currency index where it may start to turn around, okay? Now, let's also dive into the smaller time frames. And here I want to point something out, very important. All right? Also, the 4-hourly time frame, mind you, is on the bottom. That's not a small time frame. That's as big as you can get intraday. Well, no, obviously the 12 hour is one of the bigger ones intraday, but 4 hour is a very popular large intraday time frame, right? Because there are only so many of those in a trading day, and that is bottomed out. Also, want to point out that we have a gap here, right? What do you know about gaps in these charts? They usually get filled. That means the move, the resulting move is likely to be a move to the upside to fill that gap, excuse me. And so all that to say, and not of course neglecting the idea that you're on the phi ratio. Remember, the phi ratio is important. It's not just important mathematically, but in terms of charts, financial charts, you typically see support at the phi ratio when you're above it and resistance when you're below it. And look where the US dollar currency index is from its previous move up, okay? This is the previous move up. This is the retracement. Look where we're likely finding support, right at the phi ratio. Don't be surprised if what you see is some sort of reaction at this level, okay? And any reaction to the upside, obviously, if the US dollar currency index is going up, Bitcoin is going down. They're inversely correlated. So this is what I'm seeing in the chart. This is also why I believe that that move to the downside in Bitcoin is imminent. I would be very careful, once again, about that, not just in Bitcoin, but in all assets. Just, this is the time. If you have trades open, close them, take your profits. Obviously, if they're not, short trades to the downside, but if they're long trades, close them, take profit, wait for a big move, wait for us to hit major support, then you get back in again. Not financial advice, but just what I would do. I've been caught on the wrong side of these moves so many times. It's kind of like, after a while, it happens so much, you're like, oh, I've seen this movie before. So just word to the wise, guys. Hope you're well. Hope this was helpful. Hope this was useful. Like, share, and subscribe as always. And I will see you next time.